Our mission with this company is to help people become consistently profitable traders. That's it. We talk about being a home of 80-20, and here you go. What's up, everybody? My name is Ryan, co-founder of the Forex Trade Room, home of the 80-20. Our sole mission with this company is to help people become consistently profitable. That's it. There's a lot packed into that statement that we do work on: mindset, personal development, understanding how these markets move from a technical perspective and from a fundamental perspective. We give it all to you. If you're interested in joining us in the inner circle, check the link in the description. Come join the family, right? We're going to dive into the Swiss yen and take a look at the market and see what's happening. On this Swiss yen, we're going to do a top-down analysis, right? Starting at the monthly time frame, as we do, coming all the way down to our 1 hour time frame, see what opportunities lie ahead. So as always, right, we want to mark out our extreme highs and our extreme lows, right? Just to frame out the market. See that at the end of the day, it's just one big range, right? We had a nice breakout there, get some all-time highs on the Swiss yen, right? And there's our all-time low. All right. So there we got it framed out. We're sitting at the top of a zone. All right. So we'll drop in our support and resistance levels, and then we will dive into getting these marked in. All right. Here we go. Monthly levels are black. So we'll drop that level in there. We'll drop another level in there. Another support level there, and there. All right. Not sure how that one got in there. We'll remove that. Bang. So we got our support and resistance levels in. Okay. Make some slight adjustments there. Slight adjustment there. So, all right. Then we're going to take these down. We'll remove these from the chart. We'll take these levels down to our lower time frames. Bang. Like so. All right. So come over to the weekly time frame. We do exactly the same thing. Right. The reason we teach the methodology the way that we do is because it's consistent. And the only way to get a consistent product is to have a consistent process. Right. So when you see our chart markups, you're not going to see us doing anything different. Our top-down analysis will be the same. Right. The way we enter trades will be the same. Right. The thought process and the way we exit trades will be the same, right? And the people that we've taught, you'll also see the same tendencies, right? The way they mark up the charts is the same, right? You'll see them doing the exact same things that we're doing, okay? And it's for a reason, right? Again, to become consistently profitable in anything, to be consistent in anything, you have to have a consistent process. So we like to ensure that we keep things consistent. All right. So there's our support and resistance on the weekly time frame. Some small adjustments there. Again, these support and resistance levels are swing highs and swing lows, right? 5 candle formations. Swing high has a high center point candle with 2 candles to the left and 2 candles to the right that are lower. And your swing lows is a low center point candle with 2 candles to the left and 2 candles to the right that are higher. All right. So those are your swing highs and your swing lows. Those are your support and resistance levels. So we're going to pull those off. We're going to drop these levels now down to the lower time frame, like so. All right. We got our most recent and most relevant levels. And then we got some additionals down lower. Okay. The reason we use Smart Trade is because it allows us to be efficient in how we mark up our charts. We meet every Saturday with our Inner Circle members at 7 a.m. Eastern Standard Time. And we go through every pair, mark up every pair to prepare for the week, understand what's happening in the market, and to be prepared for when the trades come during the week. We know what we're looking for. We're not rushing. We're not trying to find a trade. We're able to sit back and allow the market to come to us. Right? We're not searching for a trade. We know we don't have to trade every day to make money. Right? There's a thought process out there that you have to trade more in order to make more, and that's not true. It's actually completely false. There's nothing statistically accurate about that, right? It's about risk management and consistently following your rules, right? So on the Swiss yen, right? You see, we came out of these all-time highs and we started making this move to the downside, right? We came into a low, right? Previous support level here. We came back, retested that low, and now we're pushing back to the upside. Okay. We had this nice strong bearish candle here. We actually have an evening star candlestick pattern, a decision candle, an indecision candle, and a decision candle. What that tells us is that there's more downside movement coming, right? That's an indication of more downside movement coming. And then you see price broke down, right? So had an evening star pattern there. We're coming back and we're retesting this bearish engulfing candle, all right? You see price pushing to the upside here, retesting this zone. All right, so we want to drop down to our lower time frames to take a look to see how things are moving there. But before we do that, let's run our fibs on the weekly time frame from our low just to see what's happening and see where things are. We'll come from this low here and we'll run the fibs to the upside. Those got taken out. So we'll come to the next low and there we are. Interesting, right? We talk about being a home of the 80-20 and here you go, right? You got a shallow retracement here. 236, shallow retracement. Price pushed into your 118, 127 zone and you're getting your breakdown, right? Price broke down and we're getting a pullback now, right? We still haven't gotten that 382. So from a weekly time frame perspective, right, we got an 80-20 scenario playing out. We talk about, right, it doesn't matter the time frame, doesn't matter the asset class. The methodology that we teach is the same and it's consistent regardless of what you trade, right? So if you're a stock trader, you can take these same concepts, put them on your stock charts and mark them up the exact same, right? If you're a gold trader, if you're a Bitcoin or Ethereum trader, you can take these concepts and put them on your charts and mark them up the exact same. All right. So that's where we are. 80-20 scenario on the weekly time frame. We're getting a pullback right now. So we'll drop down to lower time frames to the daily, get our support and resistance in, and we will go from there. All right. So we drop down to the daily time frame like so, and we'll drop in our support and resistance like that. All right. Zoom in. Whoops. There we go. Zoom in. And now we'll drop in the levels. I use red for my daily. Help keeps me organized, right? And I can take a look at it quickly on my phone or if I'm on the go. Different platforms, I know where the market is. So we got these two levels that are close together. We're going to take them as one. All right. So there we go. We got a support resistance in there. Boom. Like so. Okay. Got all of our levels marked. All right, let's take those smart fibs out of the equation and let's take a look at things from a Fibonacci perspective. So let's drop down to our low point here and we'll run our fib to the upside like so. That one got taken out with this push down to the downside here. So we'll come to that low and we'll start from there. Now, this is what we have. All right. Came out of that B boundary zone and we're pressing to the downside. We know on the weekly time frame, we got an 80-20 scenario. So this is just a pullback, right? So now we're looking at price moving to the downside, okay? Price moving to the downside, coming up, retesting this strong bearish engulfing candle, right? We're getting that retest now, okay? So price moving to the downside. So let's, we dropped in our support and resistance levels. Let me double check these. I might have missed some. Nope, we're good. All right. So there we have it. Not the prettiest swing high, but it's a swing high. You got a high center point candle right here, 2 candles to the right and 2 candles to the left. So, right, and you see price is coming back to retest at least 50% of the strong bearish candle here, right? So strong move there. Okay, retest. Now, again, 80-20 on the weekly, right? We got a deep retracement 8-6 retracement here on the daily. Price is pulling back to the upside. What I want to do is take a look at this from a different perspective. I want to take these fibs out, and I want to map them from the high down. Let's see here. Right, so we see AB boundary, we got a 618 retracement, price push to the D extension, and then we got a strong explosive move back to the upside. So our active fib would actually be like this. Bang, we got a 618 retracement in line with daily resistance, right? In line with daily resistance. So this is a key level that we like to trade, 618 and deeper, okay? So that's one way we can look at this, right? Fibs coming to the downside, 618 retracement, okay? Another way we can look at this is coming off the low, right? This is the last impulsive move to the upside, right? So we're going to run our fibs to the upside. And what we see here is we call these our sub fibs. These are smaller waves inside of the larger move. Right? Our larger move is to the downside. These are smaller waves within that. And we see we have our daily D extension right here. I'm going to mark this with a thick red line. It's our daily D extension, right? Just above this daily resistance level. We're going to take this also down to our lower time frames, all right, along with all of our daily levels. Okay, so we know where we are from the fib perspective. We know on the weekly time frame, we got an 80-20. We know on the daily time frame, we're getting close to a D extension. All right, getting close to a D extension. So let's drop down to our 4-hour and take a look at things there from a Fibonacci perspective. Right, so we zoom out, right? Zoom out, and what we want to do is we're going to run the fib from the same spot, right? Same spot from the downside to the upside and see where things fall. Ha. Right? What do we have? It doesn't matter the time frame, good people. We got a shallow retracement, price pushing to the 118, 127 zone. Right? And that 127 is right in line with that daily D extension. Shallow retracement. Right? Price is hovering in this zone. Daily D extension is there. Right? So what we'd love to see is for price to push up, hit this D extension, right, and be well into that 118, 127 zone, give us an opportunity to get short. So this is a swing trade opportunity, right? Weekly time frame is a swing trade opportunity, right? Back to the 382, just off of this move, you're looking at 313 pips. Again, people say these moves don't happen in the market, but they do. They happen all the time. They happen all the time, right? So it's 311 pips for the downside there as potential. Got to be patient and allow price to push into that zone. But 80-20 scenario now on the 4-hour time frame, right? 80-20 scenario on the weekly time frame. Got confirmation with 80-20 on the 4-hour time frame, and we have a daily D extension also within that zone, right? So we got multiple levels of confirmation here of potential reversal coming, right? So let's drop down to our 1 hour. We're going to take this zone, right, the 80-20 zone on the 4. We'll drop that down to our lower time frames as well. Okay, so drop down to the 1. We're going to look at it from the same perspective. Same perspective, right? Come back to our low. Come back to our low, and we'll run the fib to the upside. Bang. Surprise, surprise. 80-20 scenario on the 1, right? Multiple levels of confirmation here. The D extension right in line with that 127. Weekly, 4-hour, 1 hour, all in alignment, right? So now what we're looking for is either, right? And we got multiple ways to enter these trades, but we also want to be patient. We want that D extension to get hit. So we want to see one more push to the upside to get to that D extension, then give us that signal of a reversal, right? Multiple ways you can look at it. You can draw your trend lines, right? Now you draw your trend lines, extend that out. You want to get that second touch of that line, which is there. Bang, right? Then you start at that last touch and you bring that trend line to the upside, like so. The goal when drawing the trend line is get it as close to the highest point as possible without cutting off any wicks or bodies, right? Now, listen, originally your trend line would have come here, right? But the caveat to the trend line is you don't want price to move sideways through your trend line, right? And you see, as you zoom out and look at this, right? This is just consolidation. This is just consolidation here. Just sideways push. Top of the range, bottom of the range, top of the range, bottom of the range, moving back to the top of the range, right? So that's consolidation, that's sideways movement. So what we want to do in this scenario and in this scenario only, we'll move that trend line to the outermost point like that, right? Move that trend line to the outermost point. Now we wait for a nice convincing bearish candle break of the trend line. Right, you see all these candles are just choppy. See all these candles are just choppy. Okay. So we want to see a push to the upside, right? We want to see a push to the upside and then get a break back down. Right. So this is what we're looking for in a Swiss yen. It's a beautiful scenario here. Okay, beautiful scenario. The other way to look at this, right? The other way to look for your entry confirmation, which I mentioned in previous videos, is using the Ichimoku cloud, right? And we're going to get a video produced breaking down the cloud, how to use it, right? But utilizing the Ichimoku cloud is a great confirmation point, right? It's a little bit more conservative, but it helps you get the bulk of the move, right? And you can see it at a glance, right? So we're looking for a price to push up into the zone. Okay, looking for price to push up into the zone, give us a move back down to the downside and break the cloud, or a bearish candlestick break of your trend line. All right. So that's on the 1 hour time frame. So I want to drop down one more time frame just to look to see what's happening on the 15-minute time frame on this. So let's go down to the 15 and we'll take a look there to see if we have any additional levels of confirmation. All right. So let's come all the way back to the low. All the way back to the low. We'll run the fib off of the low here. Let's see. Bingo. All confirmation points. This thick red line is that daily D extension. This is that 4 hour and 1 hour 80-20 zone, right? On this 15-minute time frame, you also have shallow retracement. Price is hovering in that 118, 127 zone right now. So again, even here on the 15-minute time frame, right? Intraday traders look for price to push into the zone to get to that D extension, and then give us that entry confirmation to get short, right? You can drop the cloud here on the 15-minute as well and look for the break, right? You see how price is just moving sideways through the cloud, right? We want a nice round move, all right? So that's what we're looking for on the Swiss yen. Opportunity to the downside, right? Opportunity to the downside. It's quite a bit here, right? On this 15-minute, once we get that last push to the upside, that's 336 pips to the downside. There's opportunity in this market, man. And you don't just have to trade with the trend. You can trade counter trend and make a lot of money. So look, good people, there's lots of opportunity in this market, right? If you like these markups, let us know in the comments. If there's other areas that you need assistance with in your trading journey, let us know. We can do some more content in those areas, right? Our mission with this company is to help people become consistently profitable traders. That's it. That's it. That's our goal. That's our sole mission. So we're here. We're moving. If you want to become a part of the inner circle, click on the link in the description, right? Come join the family. You have the opportunity to go through our training, do the homework, post your markups inside of our Discord channel, right? We can give you feedback, right? If you're just looking for a trade setup service, we have that as well. We just launched our trade setup service, right? You can also click the link in the description. If you're just looking for high probability setups in the market, trades that we are taking, Benny and myself, when I say we, check out our trade setup service. Take our trades and allow yourself the opportunity to make a little bit of money while you're learning this skill. So come join us in the family if you want. Also, we do live sessions Tuesday, Wednesday, Thursday 6:30 a.m. Eastern Standard Time to 7:30 a.m. Eastern Standard Time, and 9 p.m. Eastern Standard Time to 10 p.m. Eastern Standard Time. Right? So we got a pre-New York session and an Asian session. And we also do live sessions here on YouTube and for our Inner Circle members. Inner Circle members are able to join that session live and get their questions answered. So we'd love to see you on the inside. Until next time, my friends, have an awesome day. Peace.